Good afternoon, everyone. Thanks for being with us today. I've got a brief presentation for you. I've only got a handful of slides. We'll spend most of the 45 minutes we have together on my live charting platform, and there is a lot of material to cover, so I'm going to be going through this fairly quickly, but we'll try to leave as much time for questions as possible. A bit about us here at Trading Wins before we get into this. We are a group of pro traders with well over 30 years of experience. We're actually real traders and teachers, and we've been developing our own strategies and trading systems over the years and teaching people around the globe from complete beginners to experts. Now, today what I'm going to share with you is, are the money management rules that myself and the other traders here at Trading Wins have not only been using for many years but continue to use today. I'm going to tell you exactly what you're going to need to trade this system. Then I'm going to show you the actual trade setup. And then when we get to this part of the presentation, I'm going to ask you to type in a symbol or two, anything, whether it's a stock option, Forex pair, really doesn't matter. We can bring up the chart, analyze it together, and I'll show you how this system would have performed on that particular market. Okay? And then again, hopefully we'll have plenty of time for some Q&A. Now, a couple of poll questions before I get started, just so I know who my audience is and I can tailor my examples to you specifically. If you don't mind, please type in which market do you trade most. Is it stocks, options, futures, or Forex? Take a few seconds, please type that in. I'd really appreciate it. Okay, great. Thank you so much for that. I see we got a pretty good cross-section, a lot of options again. Excellent. Okay, one last poll question. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you very active, 51 to 100, 100 plus? Again, please take a few seconds to type that in, and then we'll get right into this. Ooh, some pretty active traders. Several over 100. Excellent. I think you're going to like what I have to show you today. It's something that certainly can keep you very active, and it's very effective. Now, a bit of legal stuff first. Trading can be very risky if you don't know what you're doing. So please educate yourself first before you try trading with real money, okay? Now, money management rules. These are rules that we live by here at Trading Wins. Number one, you should never trade with money you can't afford to lose. I'm sure you've heard that many times, but it merits repeating. And really what it's all about is trading with an amount that is small enough that it feels completely insignificant to you. The reason being is it's so much more important how you manage a trade once you're in it than it is selecting the entry. Okay, once you're in a trade, you need to remain calm and think rationally and be able to follow your rules. If you're worried about the amount of money you have in there, you're not going to be able to do that. So whether it's a couple $100s or several thousand, the amount is not important. What's important is that it's small enough that it feels completely insignificant to you. Also, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, consider reducing that to 2.5% or even 2%. You'll still have a sizable trade on, but you'll really reduce your exposure. Now, this one kind of shocks people. They'll never have more than 50% of your account balance active in the market at any one time. Most of the time, the reaction I get is, why would I want to do that? I'm going to have half my account just sitting there earning nothing. Well, the reason is twofold. Number one, there are so many factors when it comes to the markets that are completely out of our control. And any major news announcement or catastrophic event, you know, a geopolitical event, a 9/11 type, can really drive the market against you in a hurry. So, number one, it's meant to reduce your exposure and limit your loss. And number two, should such a loss occur, you then have half your account balance still there that you can employ back in the markets and make back that loss. And with what I'm going to show you, it really wouldn't take you that long. Also, never place more than 2 trades per day. Now, that example is for anyone trading on daily charts. Of course, if you're trading on different time frames, just consider no more than 2 trades per that particular time frame. The real intent here is for you to spread out your trades and select the best of the best. As we've seen over the last few months, there's been increased volatility in the market. So we've seen many times where the Dow would be up 300 points, let's say the S&P up 25 and NASDAQ up 50 or 60, and on a night like that you will get several setups, and if you jump in and put in 8-10 trades at a time, and then the very next day the market completely retraces, which we've seen many times, you're going to find yourself in a huge hole right off the bat. So the intent here is to select 1 or 2 of the best trades per time frame and spread them out. Okay, a couple other things that we follow here. One, I really want you to write down and walk away with today, and that is you will never go broke taking profits. Now, many people say you will go broke taking small profits. The purpose of this is none of us have a crystal ball, and we're not able to predict the exact top of a move, but as you get more and more experience in the markets, you will be able to stay in a trade a little longer each time and squeeze out every ounce of profit. But especially if you're just starting out, get used to banking your profits. The other reason why we follow this is the system has a limited risk profile. It's a very minuscule amount of risk that if you follow this and take your profits when you have them, you will do very well. I'll show you several examples of that. Also, trading is not about whether you're right or wrong. That's important. Okay, but it is all about how much money you make when you're right versus how much money you lose when you're wrong. Okay, now what will you need to trade this system? First of all, just about any charting platform to go out and buy an expensive, complicated charting package. There are only 3 indicators you will be plotting on your chart. Number 1 is the 20-period simple moving average. 2 is the Ichimoku Cloud indicator, which is an indicator that has been used very successfully over in Asia for many, many years and has recently become a lot more popular here. We use a very stripped-down version of it. I'll explain in a moment. And then, of course, there's the relative strength index, or the RSI indicator, and these 3 are available on most charting platforms. So again, there's no need to go in and spend money on new hardware or complicated charting software. If you are watching this video or this webinar, you already have everything you need. Okay, a few benefits of this system. Number 1, it will work on any market: stock, auction, futures, forex, globally, any time frame, any price level. We have been trading this for years through all sorts of different markets, and it is very, very consistent. Number 2, you don't need a lot of experience to trade this. Just about any level, any trader or investor with any bit of experience can use this. It is very clear or easy to spot on a chart. I'll show you in a moment, and it has very clear entry and exit rules, so very simple to follow. Again, more importantly, it has extremely low risk, and most importantly, it is consistently profitable. Okay, so let's talk about the strategy. There are 3 components to this that I've already mentioned: the 20-period simple moving average. Okay, and I should say, we have tested this with exponential and weighted. We just find that the 20-period simple moving average works best. The Ichimoku Cloud, but it is a stripped-down version of it. I'll explain in a moment. And then the RSI. So let me bring up my live charting platform and show you this setup. Okay. So here we have a chart of Baidu, and on this chart we have the 20-period simple moving average in blue. We have the Ichimoku Cloud. Now these are just the clouds. Okay, I'll show you the full indicator in a moment, and the RSI indicator. Now this is also a little different. The default on most charting platforms is 14. We've cut that in half. We want this to be very responsive, so we've dropped the setting down to 7. And the RSI is typically used to identify periods of overbought or oversold conditions. So typically you have a line at either the 80 and the 20 areas, or 70-30 to identify those overbought or oversold conditions. We remove those and we draw a line right down the middle at the 50 level. Okay, I'll explain how to use that in a moment. Now, for the Ichimoku Cloud, I'm going to go into the settings here, and I will put back on the defaults. First of all, we don't change the settings. We use the default settings. But the Ichimoku Cloud is made up of 5 things. There's the Tenkan line, the Kijin line, the span A and span B, which are the clouds, and the Chiku line. So if I go back in and plot those in, all right, you're going to see what a difference it makes to the chart. All right, let me just make sure I have, yep. So that's the chart with the full indicator on. Now this indicator is used as a trading strategy on its own. All these lines will give you entry criteria, exit criteria. They're used for support, resistance, many things, and I'll touch a bit more about that later. But as you can see, it makes the chart very messy. All right, so what we do is we remove most of those lines. We just leave the clouds that we use for trend, to identify trend, and we keep a nice, a very simple and clean chart. So whenever you bring up a security, we're looking for a couple things right off the bat. We're looking for trend and momentum. So let's talk about how we're going to spot that. Trend, very simple. You look for the candles or the bars and the moving average, and if they are above the clouds, then we're in an uptrend. If the candles and the moving average are below the cloud, that means we're in a downtrend. If they're overlapping the cloud, okay, such as here, here, or here, then we're in a consolidation period, which we do not want to trade in. Okay, we only want to trade with the trend. So that's how we spot the trend. Now, when it comes to momentum, what we do is we look at the slope of either the candles, okay, or the bars, or, and this is where the 20-period simple moving average comes in. We look for that slope in the moving average, all right? And, you know, the whole point about momentum is the more significant it is, the better. You can have slight momentum in your favor, you can have stronger momentum, or you can have very strong momentum. The stronger that slope, or the more significant that slope, the better. All right, it's like a wind at your back. It's propelling the stock forward, and it works exactly the same in a downtrend. The more significant that slope of the 20-period moving average or the price bars, the better. Okay, so having said that, let's look at the setup now. So first of all, we're looking for trend. So when you get a appearance such as this, where the candles and the moving average are above the cloud, you know you're in an uptrend. So all you're going to be looking for is a long trade at this point. You then look for momentum, which we do have here. We have this slope higher. So whenever you have trend and momentum in place, you then focus your attention on the RSI. And for a long trade, what you're looking for is for the RSI to dip either back to the 50 or just below it, and then turn back and cross back above. And it is that point that is your setup bar. So let me mark these. The first one was right here. Oops, sorry. This green bar right there was your first setup bar. Now what you're looking for there for your trigger to get you in the trade, all right, and I'll remove this line just to show you clearly, right, this green bar right here, I'll zoom in, hopefully you can see that, all right, it's right here, this green bar right here. So what you're looking for is a trade above the high of that bar to trigger you in the trade, okay. Now a lot of times with this setup, we get what we call a double dip. You can see here on the RSI, it dipped below, back above, then below again, and back above. So it gave us this W formation. We actually don't mind that, and in fact, we like it very much because typically when you get a double dip that way, you get a much stronger reaction. Okay, so your first setup bar was this one. Your next setup bar was this one. Okay, and then here we do get a trade above that bar, all right, and off it goes. All right. Again, that momentum is what will propel the stock forward. And so what you're going to notice through most of the examples I show you today is that when they do trigger you in the trade, it tends to move in your favor immediately, which is huge because, number one, remember what I said about trading is so much more about managing the trade once you're in it than it is selecting the entry, okay? And you need to remain calm and think rationally and follow your rules. Well, when it goes in your favor right away and you're in profit right away, it's so much easier to do that. You're automatically calmer because you're making money. You're not losing money. Okay? And I noticed many of you, when I asked the poll question, many of you were option traders. Well, if you've been trading options for any length of time, you know that once you get in a trade, if it goes against you right away, trying to make up that loss in premium requires a much greater move in your favor to make that up and then go into profit. So moving into profit right away is crucial when you're trading options. Okay. Now let me show you an example of a short trade. And a short trade is the exact same criteria but reversed. In other words, you're looking for the bars or the candles and the moving average to be below the cloud. All right. That tells you you're in a downtrend. Secondly, you're looking for that momentum or that slope lower in the bars or the moving average. Okay. And then once you have those two criteria, then you're looking for the RSI to move back above the 50 and then back below, and it's that cross below that is your setup bar. So let me zoom in here and show you. Which is right in here. See how it moved above and then back below, and it's this bar here that is the setup bar. Now, the most important thing when you do get this is that the slope in the moving average is maintained. In other words, when you get a retracement in the stock, okay, you could mistake that upward slope for upward momentum. But you're in a downtrend, so all you want to make sure of is that the slope in the 20 is maintained. Okay, that tells you that this is merely a pullback, and then you're looking for this cross back below in the RSI to tell you that that pullback is over and that this trend is going to continue. Okay, so that is the setup. The trigger into the trade is a trade below the low of that candle. Okay, which you get on this very next bar here. And then off it goes. All right. Now, whenever you get triggered into a trade, your stop loss goes just above the most recent high. Okay, just above the most recent high. And it's same for a long trade. Okay, let me show you a few more examples of that. For a long trade, here's a chart of Apple. You clearly have trend, an upward trend because the bars and the moving average are above the cloud. You have momentum because you can see the slope here. So then you focus your attention on the RSI. It dips below and back above. Now you can see here, okay, here is your setup bar, this little green bar. Let me show you something very important here. Okay, here, this one here, this first move, let me highlight it for you. This one here, you see how it came right back and just touched the 50, moved up? It doesn't matter whether it just comes back and touches it and bounces or it comes way below it. The amount doesn't matter. The point is it does have to at least touch that 50. But the important thing here is this one here is your setup bar. Okay, this is the bar where it moved back above the 50. So what you're looking for to trigger you in the trade is a trade above the high of that bar, which we did not get here. Okay, we did not get here. Then it dips again, and now here on this bar here is where it moves back above. Here we do get a trade above the high of that bar, and off it goes. Now, you see, I'm zoomed in here, so we lose a bit of the slope. But if I wasn't, and you do get a moving average that's flat here, okay, you want to skip that trade. You want to make sure that that momentum remains intact, or that slope remains intact. You see, here there was another setup, okay? And we get here another double dip. You can see it dips, it crosses above, and then dips again, all right? So when you get this double dip, when you're triggered in on the first move above, like you were on this candle, and then you get another dip again, well, if you're more of an aggressive trader, you can actually add to your trade. If not, just maintain your original position and then focus on managing that trade. But again, you can see it moves in your favor right away. Let's look at a few more examples because I know we don't have a lot of time. I want to get to the point where you guys can throw out a few symbols and we can analyze a few charts together. Here's a chart of GMCR. What are you looking for? You're looking for trend and momentum. Clearly, very easy to spot trend and momentum. You get these pullbacks, okay, in here, and those are your entries. And boom, there it goes. More recently here, there were a couple of entries. All right, here and here. Okay, so it was in this area here, oops, and this one here. Okay, again, you can see how they move. We'll talk about exits a little later. BPT, same thing. Now, you see what happens in this example here? See how the moving average, maybe I should zoom in more. Let me remove that for a second. You see how the moving average not only loses its momentum, it actually starts turning higher during this double dip here. So that's telling you to stay out of the trade, okay? The fact that it lost its slope tells you no longer have momentum. Now what you're going to find typically is that when you have a sustained trend like this, you're going to have multiple opportunities to enter. And in fact, a little while later, we regain momentum to the downside, and you get an entry in this area here, right based on this touch, right there, okay? And back in here, there were several to the long side. You see all these dips back in here, okay? Very easy to spot, all right? Very easy to manage, okay? So now you see how right here, I know many people always say, well, it's hindsight's 20/20. You can look back at a chart and pick these out easily, but how easy is it to spot right now? Well, you can see now that we have the candles and the moving average above the cloud, okay? And we actually do have a nice slope higher. So now we focus our attention on the RSI, and all we're waiting for is for the RSI to dip below or right back to that 50 and then cross above. And it's at that point that we will take our entry, okay? So that's what we're looking for. You put BPT on your watch list and wait for that move. Now, one other thing I want to point out to you is that when you get a cross of the price action from below the cloud to above the cloud, or vice versa, but you do so with momentum. In other words, look at the slope on this 20 here when it's going from below to above. When you get that, it typically means that there is a strong move in that direction about to happen. That doesn't mean you jump in right away. You got to wait for a clear signal, okay? But that typically tells you that that move is not only going to be a strong one, but it's going to be sustained. It's going to carry on for a while. You see this one here? Look at that. It was almost vertical when it crossed from above to below the cloud. And in fact, it carried on for quite some time. It was a very, very strong move, okay? That's what you want to see. See, it happened here. This was your first heads up. It retested the cloud, came back, held on for a while, but then it just collapsed. All right? Now, I noticed there were a bunch of futures traders on here. Let's look at a futures contract. Here is crude oil. Okay, we all know what's been happening with crude lately, but how would this have worked? Could we have taken advantage of this move? Well, you'll see that the slope here, crossing from above to below, was significant. You had momentum in your favor. So you had that slope, you had the candles and the moving average below the cloud, so you had everything in place. You focus your attention on the RSI, you wait for a move above and then back below. And this was your first one, right in here. And in fact, you got a little double dip there, okay? And so it was in this area, all right? You wait for a trade below the setup bar to go short, stop goes just above the most recent high, okay? Short while later, if you had missed that one, there was another entry in here. If you had missed that one, there's another entry in there, okay? None of the stops would have been violated here along the way, okay? There's another one right in here if you had missed that. So that's the other nice thing with the system, is that when you do get a sustained trend one way or the other, even if you've missed the earliest entry, it typically gives you many more opportunities to go in. So this one here, you would have been in this trade all the way up to this level here. This is where you would have been stopped up. But we'll talk a bit more about that later on. So these moves can be very significant. Here's a chart of the Euro futures. Very similar. Again, you're looking for trend and momentum in your favor, and then you're looking for the RSI to move above and then back below, and there's your entry. That's the first one, okay? And then several more along the way. Now, one other thing I didn't mention, when you do get triggered in a trade, so you see this move across above, back below on the RSI, and now you wait for a trade below the low of the setup bar, you enter short, you put your stop above the most recent high, you then ignore the RSI. So even though it comes back later to move back above and so on, you don't look at that for your exits, okay? That's not part of it. That's not how you're going to manage your trade. You're only using the RSI for your entries, all right? And there are several more opportunities to get in here along the way, all right? Very powerful. Forex, same thing. Nothing changes. The settings remain the same. Everything remains the same. Here's a chart of the Euro Canadian dollar pair, and again, trend momentum in your favor. You wait for that move above and then back below on the RSI, and off it goes. All right. See here, it had lost momentum. It completely flattened out, and so you don't take that. Even though it would have worked out, it doesn't matter. You don't take that. Here's a chart of British pound, US dollar. Okay, same thing. Here, you would have lost, it flattened out, so you would not have gotten in on this one here, okay? That was disqualified because of that. But here, when you clearly had momentum intact, judged by that slope again, there are many opportunities to enter in this area based on this and this, okay? Sorry, my producer's telling me to speed up so that we can look at your tickers here. So let's do that. I'm actually going to bring him on. His name is Raul. He's going to help me read off some questions and your symbols. So if there's a security that you like to trade, or you're in a trade right now, or you're thinking of getting in a trade, type the symbol in to the chat box. He'll read a few out. I'll bring up the charts, and maybe we can answer some questions along the way. Raul?
Vince, thanks so much for having me on. Sorry I had to speed you up a bit. There are so many questions and tickers that people want to know about.
No problem.
I know we can only get to so many of them, but I wanted to leave as much time as
Absolutely.
possible. Let's start with some Forex first. Carolyn was asking about Australian dollar, Japanese yen on a 5-minute.
Australian dollar, JPY on a 5-minute. Okay. So again, this works on all time frames. Now, what I find with the system is that the 15-minute and the hourly work fantastic, but you can see that regardless of the time frame, how well it works. Same rules apply. I didn't change the settings at all. Just switch to 5 minutes. And again, what are we looking for? We're looking for trend, identified by the candles and the moving average being above the cloud here. Momentum by that slope, which you get. And not only do you get it, but you can see it moved from below to above the cloud with that slope intact. So you knew this move was going to carry on for a while. What do you do at that point? You focus your attention on the RSI. And right here was one entry. okay, which is right in this area. So there we go. Okay, right in that area. And look at that move. 1, 2, 3, 4, 5, 6, 7 trading sessions, or trade sessions, 5-minute bars, I should say. 7 bars in a row to the upside. How easy would it be to manage that trade? Let's look forward. Here's another one right in this area. Okay, again, why? Because you have that momentum or that slope intact, trend intact, dips below, back above, and off you go. Very simple. Works on any time frame.
Ida wants to know about, this one is uncommon. I haven't seen this one. FireEye, F-E-Y-E.
Yep. On a daily time frame? Or
daily.
Okay, daily. Again, now, you see, this is more of a choppy chart, okay, a lot of sideways action. And the good thing about this is that during these periods here, okay, it keeps you out of the market. These are the areas that are the toughest to trade. This is where you get chopped around, okay? So you want to avoid those. You want trend and momentum in your favor. Now, there really weren't any trades here because this one here, you see how the moving average had flattened out here, so it would not have qualified. But right now, look at the slope we have in place here. Some very strong momentum to the downside. We've had this nice pullback into this area, and you can see that the RSI has crossed above. So now all we're waiting for is a move back below for our entry setup, okay? Sorry, I've still got the Aussie Japanese yen on here. My mistake when I switched to daily. Let me go back. Here's FEYE. Sorry about that. But again, so basically you could put the Aussie Japanese yen on your watch list and wait for a setup. You'll probably get one very soon. FEYE here, this move here really happened with no, well actually there was a pullback. Right here was your entry. Now this is one where you would have probably got stopped out because there was a very small move in here, and they're not all going to be winners, okay? They're not, but the majority of them will, and that's the key. But again, your stop would have been just above the most recent high, so you have very small risk on these trades. Now this one has been consolidating sideways for quite some time, okay? Now has just recently started to gain momentum. So wait for a pullback, wait for this RSI to come back below and above, and then you'll have an entry.
Next one is Gail with Amazon.
Amazon.
What's common about the three that I've asked you so far? All from women.
Yes. Oh, wow. That's fantastic. We always talk about this.
Yes.
When I started trading, there were no women in this business, and now it's at the very least 50-50. Sometimes more, which is great to see. Amazon. Again, what are we looking for? Trend momentum. Here's the area where our entry comes in. Now, if you get an entry off a gap, okay, you got to consider the risk there. It's going to be much greater because your stop is going to go above the most recent high. So if the gap is huge, disregard that trade and wait for another one, okay? But you can see throughout right here, there was a nice one because it came back, kissed that 50 line, and turned around. There it goes. Now, Amazon right now, off this recent earnings announcement, has just been spiking higher. Look at that momentum higher, almost vertical, which is great. Now the RSI is starting to move below. So if we can get a bit more of a pullback on this RSI, come back below and above, that will be our entry, as long as momentum remains intact.
One of our gentlemen friends, Stephen, wants to know about silver.
Sure, let's look at SI. Same thing. Now silver here, I mean there was momentum to the downside. It had started to flatten out a little. So whether you took these trades or not in this area, sorry, let me get a different drawing tool, would be determined by your risk tolerance. In other words, if you see that the moving average is starting to roll over but still has some slope, then you want to judge it by where your stop is going to go. And if the stop is going to be fairly tight and you're risking a minimal, you may still take that trade because a lot of times it does go in your favor. But if not, don't worry about it. You can be selective with this. There's going to be plenty of setups, and you really do want to pick the best of the best.
Folks, I'll let Vince get back to his presentation. Austin, Rodrigo, Ahmed, Gary, Esteban, Earl, Eric, Gail. I will do my best to get to all of your questions. We will save some time at the end, Vince.
Okay, yeah, we do have limited time. Let me just wrap up. I just want to do a recap of what we've gone over today. I've shown you a system that will work on any market. You've seen examples of each, any time frame, any price level. We've personally traded $3 stocks with this. We've traded the Googles, Amazons in the world, $300 and up. So also, you saw how easy it is to spot this setup, okay? Very, very clear entry and exit rules. It is strong enough to be used as a standalone trading system, okay, or a very good complement to whatever you're trading with now. As you saw, a real nice benefit is that it tends to move in your favor immediately, making it very easy to manage, and really, really good when it comes to trading options. And the majority of the trades that don't work out are not even losers, they're just negated. Maybe I didn't emphasize enough, but remember that example, that first one I showed you, where it did not trade above the high of that bar on the entry and then took a double dip. That is the rule. That's exactly why you will avoid most of the losing trades here. Okay, now I can see here, and rules also pointed out, there are tons of questions that we want to get to about exits and about other things. Just don't have the time to cover it all today.
You've got 8 minutes.
I'll do my best to do it. But I do want to let you know, we have a class on this coming up, our pro class, February 27th, 1 p.m. Eastern Standard Time, set for 2 hours. I will be teaching this class. I believe that's next Friday, correct? I'll be teaching this class. And what I'll be teaching you during these 2 hours is the complete system, okay? I've shown you the basics today. I'm going to show you the complete from entry to exit. I'm actually going to go through 5 different exit strategies, but focus on the one that we use here all the time. I'm also going to show you how to supercharge this with options. I'm going to show you when you should be buying a call or put versus selling a credit spread, etc. Okay? Together, during the second half of that class, we're actually going to do a full scan for real-time trade setting up for the coming week. Okay? I'm going to share my watch list with you. I'm going to show you how I manually search for trades. And together, hopefully, we'll walk away with a list of trades that we can all put on and make some money off. Okay? And as a bonus, because that Ichimoku Kinken Hoi indicator can be used as a strategy on itself, we usually teach that in a separate course that we sell for $297. And I'm going to throw that in, and during that class, I'm going to show you exactly how to use the full indicator, okay, in case you want to do that. So the link for this class is tradingwins.com/move. Now, before you sign up, let me tell you what you're going to get so you know that it's right for you, okay? About half hour after you sign up, you're going to get a recording of the previous pro class we did, which was a couple weeks ago. It lasted almost 3 hours. So this way you don't have to wait till the 27th to start using this. You can watch this recording and start trading it right away. Regardless of receiving that recording, we are going to save you a seat at the live class on Feb 27th. And we're also going to throw in a 30-day membership to our pro service. Now, our pro members receive nightly videos recorded by myself where I cover what happened in the markets that day, where I think things are going, and I review our open positions. I highlight new trade setting up, not only with the system, but even with others. We have several that we use here. Some we haven't released to the public yet. And for any trades that or other trade take, we will send out trade alerts, right? Both the entry and the exit, so that you can, it's a way for you to look over our shoulders and see how we do things, okay? So altogether, that's $988, but we're not going to ask you to pay anywhere near that. For anyone on the webinar today, it's just $97. We really want to give you a chance to have a look at what we do here at Trading Wins. Now, again, the link is tradingwins.com/move. unfortunately, we do have to limit this to 25 people. And that's also one of the reasons why we send out the recording ahead of time. The goal for this class on the 27th is to teach you everything and for you to grasp the concept completely so you can walk away from the class and trade this like a pro, okay? And so we really do need to answer all the questions in that class. That's why we need to limit the number of seats. Okay, so again, I'm going to show you the complete system, entry to exit, how to trade it with options. We're going to do a scan together for a real-time trade setting up, and I'm going to teach you the full Ichimoku Kink and Hoi indicator. Again, it's tradingwinds.com/move. I believe we'll type the link in the chat box for you. But if we still have time, I'd love to answer more questions, Ro.
I've got a lot of questions, but not a lot of time, so I'll go through them as quickly as I can. Is there a number on the momentum indicator for for entry and exit?
A number on the indicator? Well, the RSI is a 7 setting, okay? It's usually on most charting platforms a default of 14. It's, you want to set that at 7, okay?
Which bar is the trigger candle?
The trigger candle, well, it's when, for example, for a long trade, when the RSI dips below and back above, that's your setup. The trigger happens when you get a trade above the high of that bar, okay, and vice versa for short trades.
Does this work on options?
Yes, absolutely, and I'm going to show you everything you're going to need to trade this with in the class.
Philip wants to know, how do I know this course is right for me?
Well, Philip, you know, you're obviously serious about trading, okay? I want to acknowledge you for that. Most people don't take it very seriously, and that's why they end up losing. You're here, you're online with us, you're watching this. You've already shown the commitment to do this, so that's why it's actually perfect for you. This is specifically for customers that want to consistently make money trading, all right? And that's why, again, we limit it to 25 people. We want you to really have a full understanding of this when you leave that class, okay? And hopefully we're all leaving that class with actual trades to put on as well. So it's a great class. I hope you can join us.
I want to say thanks to Al, to Robert, to Jeffrey, to Thomas, to Gail, to Patricia, to Christine, all for ordering and for signing up to take their trading to the next level on February the 27th. We're looking forward to seeing you there. When will they receive the recording of today's session? Excuse me, the order if they order today.
So when you sign up, once the order is fully processed, which usually takes about half hour, you'll then receive an email with a link to the previous recording. I do want to say, when you do sign up, you will receive another email asking you to confirm, to click here to confirm your email address. You must click there, okay? That's the only way you're going to receive not only that recording, but then all the benefits of the pro membership as well. If you don't confirm your email address, you won't receive anything further from us.
We're down to a minute. John's asking, is the $97 one-time only fee? What happens after to the pro subscription?
Yes, the class is a one-time $97 fee. The 30-day membership that we throw in here, if at the end of the 30 days you're enjoying the membership and you want to continue, you do nothing, it'll automatically renew at $97. But if for whatever reason you'd rather not continue with us, just give us a call before those 30 days are up and we'll cancel that for you.
Gail's asking, can I trade this with a small portfolio?
Yes, absolutely. I just heard the closing bell. Markets just closed. With a small portfolio, yes, absolutely. And with options especially. It has minimal risk, and I'll show you exactly how to do that with options.
Harold is asking, when will the pro subscription start?
As soon as we get you in the system, usually it's about 48 hours, okay, for everything to be completed. But you will receive those emails. You'll know exactly when it's active.
Trent's saying that he's having some difficulty ordering online. It's tradingwinds.com/move. You get that 1-888-574-2426. The team is here to answer your calls. If they don't, for whatever reason, pick up, please do leave a message and we'll return your call, Vince. It's come to that time where it's the end of our 45 minutes. As always, This is a system that you don't need to buy anything. You can go out and trade as it is. But if you want to take that system now to the next level and trade actively.
Yeah, if you're serious about making money with it, what I'm going to show you at the class is worth way more than the $97 we're asking. This is a promo here only because we do want you to see what we do at Trading Wins and so on, but the amount of material we're going to cover in that class is worth way more, and actually the feedback we usually get from the people that attend the class is that the trades that we walk away with, they normally make way more than the $97 on. So
you know, you're very serious about your trading, and I love that about you. And I know you always say that you always judge these systems by how much money you can make back.
Yeah, absolutely.
With trading this system.
Absolutely. And with this system, honestly, even if you're trading one option contract or one lot, 100 shares, it won't even take you a full trade to make back $97. Really, we hope you can join our team here and see what we do, because we're so confident that you will enjoy it and find some real value in it.